Get ready to learn forex trading from scratch. I, Akinwole Victor, will be your tutor for 6 weeks. I'll be teaching you trading from scratch, from beginners with how to know knowledge without knowing what is forex to an advanced class where you can be able to analyze trading charts yourself, take trades, identify patterns, manage risks, manage emotions, and be profitable in the forex market. I'll be taking you a 6 weeks course on forex trading from scratch, like I said, and I'll be releasing a YouTube video at least 3 times in a week. So if you've not subscribed on this channel, kindly subscribe now because we're about to dive into the world of forex trading. We are going to unlock the secrets of profitable forex trading. Let's go. Welcome to the part 2 of this trading course, the ultimate blueprint to trading the forex market from scratch. I welcome once again, and let's get going. If, like I said, if you have question and if you have question for the last class, drop it in the comment section, and I will get to answer you all your questions, all your doubts, and I'll get to solve them. So, basic knowledge on the forex trading market. So, learn how to trade step by step profitably with VstreakFx Academy. Host, I just remembered I did not mention my name in the last video. My name is Akinwole Victor Olayemi, commonly known as VstreakFX. The link to follow me on my IG is actually my the link to. I'll put it in the link in this video, and you can get to connect to me. I'll drop my WhatsApp number. Just drop your comments. I'll get to reply you and connect to you one on one. So what are 4 major forex trading tools that every forex trader must have? I'm sure you can actually have it here. We have the trading platform, the metaphor. But I know in your normal sense, you'll be like, okay, when they say what are the major tools you need to trade the forex market, you'll be thinking, I must have a big screen. Before I got a laptop to trade the forex market in my career, I was in the game for I think I was in the game for over 2 years before I had a laptop, before I got a personal wide curved screen HP monitor. So those are no, I'm sure you'll be okay due to the social media things you see on the YouTube. It's okay. No, what you need is a wide screen, a curved monitor. No, no. The 4 major basic forex trading tools you need is nothing but this just 4 because they are the major things that you can actually take all anywhere you are in the world. The world now is a digital world, and again, you know that the forex market is a job that can be done anywhere in the world, anywhere. The main thing is the skill sets. When you have the skill sets with you, you can decide to travel to anywhere just with your mobile phone or with just your laptop, or and you get everything going. Or let's say you sorry to say, let's say you lost everything in life, and you obviously can't lose the skill sets in your head, and you are just giving back $50. That's like $50, and you're able to get a phone, and you start building back with just your phone. With just your phone and $50, you start building everything back. So the 4 major basic forex trading tools that you need as a trader to trade this forex market is: one, you need your trading platform. Like I said in the trading, I spoke about the trading platform in the last video. That was in the introduction. We have Meta 4 and Meta 5. We have the economic calendar. We have the trading journal. So I'll be breaking every of these 4 major trading tools into. I'll be explaining how you can get to use them and what they are used for, and giving you a pictorial view of it. And like I said in this course, taking it from scratch to being a pro trader. So these trading platforms, you get to download them on your phones to go along in this trading course. You download your trading view, which is the trading platform we make use of. You download your Meta 4 and Meta 5. You download an economic calendar. I'll make a video on how you get to use the trading view. The trading view when we get to the I think that's the week. Maybe I think that's the week 2 or so. The metaphor and Meta 5. I'll no, no, so that's the trading view. I'll teaching you how to use the trading view first. Then Meta 4 and Meta 5 will be in the advanced class when you are ready, when you are done with all the technical knowledge and you are ready to take trades. So the economic calendar, the trading journal, the economic calendar, I make use of my FX book, and I'll get to explain everything. So let me just take it gently with you. So What's your trading platform? Your trading platform is actually the trading view. It's called the trading view. And these tools is used to analyze, to see the patterns. It has every data, and it has all data of the particular assets you are trying to trade, or the particular currency pairs you are trying to trade. So it has all those things embedded in it. It has the data, it has the price, everything you need to study, to the patterns you need to identify is all on the trading view. And it's a live market. And of like one of the things, okay, I think that will be in the okay, let's just jump so much. So this platform often contains some certain analysis that some certain analysis tools of their own. Yeah, the trading view platform is very, very nice. They have a lot of tools. We do, I think other platforms are coming up now that you can actually use to trade the forex market. You can actually draw the tools, but trading view is the one I'm so used with, and I'm sure a lot of traders are used with TradingView. So this platform contain some analysis tools that you can use to analyze the forex market. And most of what I'm teaching you, this is what you'll be using to practice. So you can use it to mark out your entries, anything. So a good example is the TradingView. That's a trading platform. So you can get to download it after watching this video. Get to download it and start practicing, or start getting familiar with the work environment. So we have Meta 4 and Meta 5 is another trading tool which you need. It's another trading tool which you need, which is it is known as an execution app. It is used, it's you connect your that's where you get to connect your brokers to. Like I said, I make use of SNES. The link will be in the video. You can use it. This does what connect your buyers and sellers together. So MetaTrader is used to analyze, to place. It's also used for analysis. Yeah, it's used to analyze the chart. It's used to place your trades. It's used to close your trades. It's used to open your trades. And you can use it both on your Android, on your Apple, on any of your devices. The trading platform supports the Meta 4 and Meta 5 supports every of your platform, and with different interface. So we have the Meta 4 and Meta 5, they have more of same features. It's just like an upgraded of Meta 4 is what Meta 5 is. You do well to download it. We use it in placing our pending orders. We use it in placing our instant order. Let's say now I know that the price of oil wants to push up to, let's say, $100 per liter, and I know immediately somebody's always saying, okay, buy, start buying it now. I can actually place that position there on my Meta 4 or my Meta 5 instantly. But let's say, okay, I know let's say the price of oil is at let's say is at um $100 presently, and I'm sensing that the price of oil is going to push down to $50, and I know that it's still going to return back to like $200. I can set a pending order that, okay, as soon as the price gets to $50, take me in the trade, execute the trade for me, trigger the trade, and the Meta 4, Meta 5 will help you execute your trade even when you are not on the chart. You can see the benefits of that app. It will take the trade for you even when you are not on the chart, and it trigger you in. You set your stops, you set your targets, and it takes the trade for you. So it has a lot of, we have the buy limit, we have the sell limit. We get to jump into every of those things as we go on. So we have the economic calendar. You know what was the economic calendar? The economic calendar is used by every traders, because not all traders are based they are not all traders are trading the currency that their country is. Or let's say, uh being in Nigeria, I'm not trading naira versus USD. Or how can I put it, like, okay, now I'm in Nigeria presently, and okay, sometimes I'm trading currencies that are quoted in USD, that's United States dollar. And let's say the election is happening in US dollar in United States, which will be affecting the economy. And like we said the participant of the forex market is the central banks, and we know it's human, central bank, commercial banks, traders and speculators. And those people, maybe on that election day, they are not opening up. And I in Nigeria, I don't have any idea of what is happening there. I'm still trying to come into the market, and I see that there's no price volume in the chart. So with an economic calendar, I can actually plan my week ahead that okay, this week or this day there'll be a fundamental impact, there'll be a news event, there'll be an announcement in the country that can have that can have an huge impact on the chart. So when I know about that and I've planned my week ahead from, let's say, on Sunday, I've planned my week on let's say, the forex market opens from Monday down to Friday. I don't know if you know about that. So the forex market open from Monday to Friday. So when it's market opens Monday to Friday, you need to plan your week on how you are going to trade your Monday, how you are going to trade your Tuesday. So the economic calendar helps you to structure everything out. It just helps you to structure everything. We have a lot of fundamental impacts that get to impact the forex market, and those fundamental impacts are very things that you need to pay attention to. They are called for them. There's a trade we have traders that trade that, which is fundamental analysis, which is news events or anything going on around in the world, or any announcement or bank policies or interest rates and the like. So those economic calendar sincerely helps you to plan it. We have my FX book. I think we have Forex Factory that has those calendars happening in the world. So you can do well to download any of them. Personally, I recommend my FX Factory. Anyone you get used to, you can actually get to download it and use it. So who is a who is a broker is something I've said before. I'm sure you should actually just say it now. A broker is someone who buys and sells things on behalf of others. They are the middlemen between two parties. Example, like I said, example, we have Xness, we have Hotforex, we have Deriv. Personally, I recommend Xness. That's what I've been using. They have a tighter spread. You get to understand what spread is in this video as we proceed. Like I said, we're still in the basic knowledge of forex trading. You'll be getting to learn everything from scratch down to what being a pro trader. So now moving on to currency pairs. What do you trade in the forex market? You trade currency pairs. Currencies are quoted in relation to another currencies. Currencies are quoted in relation to another currencies. For example, we have euros and USD. Euro is going to be in the base currency, and USD is going to be is going to be in the base. It's going to be the euro is going to be the base currency, and USD is going to be the post currency. So currency pairs, when you're about pairs, something being joined together, they are being paired together. So you are either, when you are buying, let's say, pounds USD, you are knowing that okay, maybe the pounds is having more strength than the dollar at that moment, and you are doing well to buy it. And even though sometimes I don't like to explain currency pairs in that relation so you won't get confused, just understand that we trade currency pairs, and we have, when you are talking about trading, you are giving something for this. Is buy and sell, give this for that. So the best way I tend to explain it is just forex markets are being traded in currency pairs. We have a lot of currency pairs in which are being traded. Like I said, we have major currency pairs, which is the major worlds countries. What make those currencies major currencies? Because the country is actually producing much. The economy there is actually very fruitful, and it is booming, and there's volatility there. There's daily transaction that makes the market keep moving. And you know what traders do is what to benefit from fluctuation of the price movement. And those fluctuations, how we get to identify those fluctuations are by the patterns we see on the chart. So we have the pounds USD, we have the Euro JPY, we have the USD JPY, USD card. You want it of USD card? Yeah, that's United States dollar versus Canadian dollar. We have the USD CHF, we have the Euro GBP, we have the AUD USD, we have the New Zealand USD. So we have a lot of major pairs which you can select to get to trade, and every of these 10 analysis work on them. Even though we have some certain patterns that are peculiar to some certain pairs, don't get me wrong, that's why you say you obviously can't trade 20 pairs at a time. You can just focus. I advise mostly you focus on 5 pairs, 6 pairs as a swing trader, then you want to be a day trader at a particular pair. Just 2 to 1 pair is actually very good. Be able to identify more patterns and see more things that actually play out on that particular currency. So Currencies are quoted in are actually arranged in base and quote currencies. So the base currency is considered the first currency within the currency pair quotation. Don't talk about pounds USD, that's GBP is the base currency, and the quote currency is what USD. So the base currency is considered the first currency within the currency pair quotation, with the second part of the quotation being the quote currency pairs and sorry, okay, yeah, the quote currencies are the ones in the other side. So that's how it is. Like an example, I gave an example here: pounds USD. We have the base currency should be GBP, which is pounds, and the USD is the quote currency, which is the United States dollar. So that's how it is. So we have four major forex market hours. I'm sure you're wondering, okay, this market, somebody in USA, somebody in France, somebody in Nigeria, somebody in Kenya, somebody in any part of the world, and we're making use of different time zone. You're wondering that how do we get to trade the forex market the same way? Or how do we get to connect? Obviously, you know that the world is actually being quoted in time zones, like and we have four major market hours in which we know that volumes actually push more. We have more volumes, we have more buyers and sellers in the market pushing the price. Everybody is there, and they at the same time it differs. I don't know if you're with me. Every section, every market hours differs due to the volume in that country or due to the volume of traders trading that section. So more of the most volatile section to me is the New York session. That's the United States. The USD pairs, mostly those pairs are always pushing, and we do have a lot of crazy news, crazy high impact news in the New York session, followed by the London section. And there's always an overlapping between the London and the New York. There's also an overlapping between the Sydney and the Tokyo section. So let me just try to quickly break it down for you. I'm sure you are with your book and with your biro, and I hope you've been penning down a lot of things that we've been doing from beginning of this teaching. So the Sydney section marks the start of the global trading day. It marks the start, and UTC hours is from 10 p.m. down to 7 a.m. Yeah, so just try to, anyway you're watching this video from, try to change your time zone to this to actually get the accuracy of what I'm talking about. So it has lower liquidity compared to other sections. The liquidity there is, it has lower volume, lower buyers and sellers, lower participants. Liquidity is money, it means transaction. So it has lower liquidity compared to other sections, but provides opportunities in the Australian dollar, that's the Australian dollar, and the New Zealand dollar. In those pairs, you get to see good moves, good patterns that you can get to trading if you love that. If it suits your own time zone. Like now in Nigeria, it is very difficult. Like for me personally, I don't joke with my sleep. Even though I do have quality chat time. My chat time starts most times from 10 p.m. to 11 p.m. Sometimes when I want to stretch, maybe I started late, I can do maybe 11 to 12. So those times it's actually in the night and no activities in the country in my place. So it's more of like a sleeping time. Everywhere is dark. So I don't joke my sleep, so I don't trade that particular section. You get. So Sydney section, it depends on, you have to make sure, and there are people in their country in that Sydney section that, okay, in those Australian dollar, or in Australia, that those that time zone is when their own is their activities there is just starting. They are just waking up in their own day. You get. So the Tokyo section overlaps slightly with the Sydney section, increasing liquidity, increasing what volume. Just like, okay, somebody in US, they pack the people in London, they pack them to US, and you can see the volume there will be very very much. So we have the higher liquidity in that section, and the general section they call Sydney and Tokyo section is it's called an Asian section. Yeah, because it's being traded by the Asian currencies, by the Asian people, and we have more of the Asian currencies there. So Japanese yen pairs are highly active during the Tokyo section, and it's from 12 a.m. down to 9 a.m. You can see there's an overlapping there. There's going to be a slight overlapping between the Tokyo section. That's when the section is ending. That's when there's going to be less volume into those pairs, and less fundamental impacts to those pairs. Not like less fundamental impacts to that particular Japanese yen. If there's an high impact news on, like let's say on the London section, that impacts pounds, which is a major currency, and let's say we have pounds GPY, which is pounds base and JPY the post currency, and let's say the pounds is having more power, it means at that London section JPY will be weakened. You get, so it can still, the price can, the JPY can still get affected in any section. So the London section is the largest, uh, most active forex trading because of the numbers of hours, 8 a.m. down to 5 p.m. We have Euro USD, Pounds USD, USD CHF are highly liquid with volatile during this period. During this period, 8 a.m. to 5 p.m., the price is pushing, everything is pumping. And the New York section, like I said, that has the highest volume to me. USD based pairs are highly active with increased movement in US dollars and US power. So New York section overlap with the London section in the early hours, creating high liquidity and volatility. We have from the hours of what, 1 p.m. to what, 10 p.m. So now let's understand what is PIP and what is pipette. So full meaning of PIP is what? Price in percentage. Note that full meaning of PIP is what? Price in what? Price in percentage. So a PIP relates to movements in the fourth decimal place. Yes, fourth decimal place. While a pipette is used to measure the movements in the fifth decimal place. If you open your trading view, like I said, I've told you to go through your trading view, you will get to see those things. If you look at the picture I have here, I got it online. You see those pairs. We have euro dollar there. You see the France. You see the euro there. You see this 1.2388. The fourth decimal is actually the pip. If we have anything written at the back like 2 1, that will be the pipette. You get, so, but we um there's a better way in which we get to read it, because we can't say now this is a digital world. You can start pressing your phone key to calculate these pips. There are tools on the trading view. That's why I said the trading view is very, very important. There are tools on the trading view that can easily help us read the numbers of pips that has been achieved by social assets. I don't know if you are with me. So when we get to the trading view, when I start teaching you introduction to trading view, I'll be explaining every of those things. I don't know. I want you to go through. Just look at the pause the video now and look at this picture here and look at the examples I have there. You can get to see them. You can see Euro USD 1.1052. I said the pips is 2. Pounds USD. Now I said, okay, pipette is equal to the 10th value. Yeah, like this 1.30544. That 4 is actually pipette. So price. So the explaining what that pips is actually used for. That's how we get to measure our price movement. I don't know. I don't know if I should call it something like, let's say, sorry, buying a petrol. That's more of like our liter gauge. Let me use that liter thing too, because I'll be explaining what we call lot size. So you can actually get them together. So it's just more of, let's call just like the liter. If you want to go and buy oil now, that's oil and gas or petrol, just go and buy petrol for your car. You say, okay, I want to buy 1 liter, I want to buy 2 liter. That's more of like the price movements, the quantity for that thing. So that's how the pip is. You get to understand this when we start getting to the chart and when I explain the lot size now. So what is lot size? A lot is unit measuring transaction amount. Do you understand what that mean? A unit measuring transaction amount. Like I said pip is what is more of like the liter. Then now there's something that will determine. Oh, I can't. Should I use it as? Yeah, let's like I can still use it. Let's say that the price of that liter is determined by the lot size. Let's say now, they say, okay, 1 liter. Uh, let's say 1 liter is 1,000 naira. So if that price is moving, 10 liters, that will be what, 10,000 naira. Or let's say 10,000. Let me use dollar as, which is a look. Let's say when 1 liter is $1, and if it's we are buying 100 liters, that would be what, $100. That's more of like, so a lot size used measuring transaction amount is used to measure the pips. Is used to give us to measure what the lot size is used to measure what that amount of pips will be given to us in form of either loss or in form of profit. So it's a unit measuring transaction amount when you place orders on your trading platform, on your, yeah, that's your meta 4, meta 5, orders are placed in size quoted in lots, and lots are not constant. It is calculated based on, it's calculated based on your it's calculated based on your account balance. I'll be doing a video possibly after the part 2, before the trading view, which is something I did not really plan for, but I'll be doing a video for it on how you can use baby pips to calculate a good proper risk management, on how you manage your trades, how you manage your accounts, and how you input your pips and get the particular lot size you'll be using. So for proper risk management, lot size is something very important to consider in trading. You must be so good with what your position sizing, how you position your trade, how you, because that lot size determines the amount you are willing to lose or your amount you are willing to gain on the on the particular price movement. So what is spread? Yes, I was talking about this spread when I was talking about brokers. Yeah, when you really get to enjoy your broker is during the spread. So spread is the big difference between the forex broker sell rates and buy rates when exchanging or trading the currencies. When you open, I don't know if you've downloaded your meta 4 and meta 5, this is a check for you. If when you open it, or you're on any pair, pounds USD or euro USD, you can, when you open any of them, you open the chart, you will see something like an oscillator, green, or I don't know how it's going to look on your own chart. It's going to be two horizontal line. Either, I think mostly it's going to be green and red, moving like this, moving up and down. So in between those price is what is the spread amount. So the spreads are the can be narrower or wider. It can, in the narrow aspect, in the when narrow, it can just be 0 point. It depends on the lot size you are using. It can just be 1 pips, 2 pips. It's just more of how your brokers get to actually benefit. So when you get to use a good broker, you get to enjoy what, a tighter spread for placing a trade. You know, obviously your brokers are not run on charity. They are not non-governmental organization, or how would I put it? They are not charity organization. They are working on at least what they are actually is, there is a business. So they have the one or two things they are benefiting from traders using their platform, connecting buyers and sellers together. So with a good with a good broker, you get to enjoy a tighter spread. And I said SNES is one that offers you, and I'll be dropping a link in this video to get SNES platform to get to trade your forex market. So what are other types? Yeah, like I spoke about these other types. I don't know why I'm bringing it again. We have different other types. We have the buy limit, sell limits. After we spoke about that, instant execution, even setting your stops and setting your targets are also other types, because they help you place the trade easily. So the next most common forex order types is the entry order, yeah, which is, yeah, these orders are unique in that they can be set away from present market price. That's more like the buy limit, sell limit, which I spoke about. If price trades at the pre-selected price, let's say now the price is going to $50 and price was $100, and I want to price, and I know the price is going to bring back to $200, I buy from that $50. That's a buy limit. So there are many benefits to trading with entries, including not having to be in front of your computer to execute your trade. Trading offer that freedom. I don't know if you mean trading offer freedom. So limit orders to open a trade. The first is a limit entry order to get a better entry price. If the euro USD is trading at 1.1294 and you thought it could trade down to 1.1200, that's how it's going to be quoted, this for euro USD. Your before rallying, you could place your limit order to buy at 1.200. If the euro USD is trading at 1.2939, you thought it could rally up to 1.1300, you can calculate this pip thing. You can calculate minus plus things on your phone. You could have placed a limit order to sell at 1.300. When you using a limit order, you will only be filled at the price you are this you will only be filled with the price you designated, or better, like you only execute a trade that you've actually predefined the price, that okay, the price is going to get there. Okay, now I'm not going to be there. I'll take you to take the trade for me and the like. So That's what you use your limit orders for. So what is take profit? Yes, you're wondering, okay, what is take profit? Two people go, yeah, my trade is using my TP. That's more of like your profit target. So take profit is the type of limit order that specifies the exact price at which to close out an open position for profit. To close a open position for profit. Let's say you've taken your trade, whether an instant execution or a pending order, and immediately you take that trade. Let's say you are actually stepping out or stepping away, and you want that price that, okay, when this price gets to $200 after buying from $50, close me out. And you're not on the chart, or you don't even want to monitor the screen, or you're not going to have access to your PC or your phone for the next 5 6 hours. So what you have to do is just set a take profit order limit. Is also on your Meta 5. Maybe I'll do a video for that also, but that will be at the ending of the course. That's when you start taking your trick. And but you can play with your Meta 4 and Meta 5. That's why I ask you to actually download it, play with it, and learn how to set the profit order, take profit, and just play with it. It's a demo. They'll give you a demo money to actually play around. So we have the what is stop loss. So stop loss can find as an advance order to sell an asset when it reaches a particular price point. Let's say, okay, I'm trading. Okay, I want to buy off when the price is at $50, and that price losing down, and I'm in the trade, and the price keep going down to like $20. It's actually dropping. I'm losing over like $30 already. So what you have to do is what you set your stop loss orders to take you out at a predefined price that you know that, yes, this anytime this price gets here, it means that this price is not ready to go to the upside yet, and you do well to what close out. It will actually close out the trade for you automatically. So what is forex analysis? What is forex analysis? So forex analysis is the study of determining whether to buy or to sell. Yes, just determine when to buy or to sell. That when am I buying? When am I selling? We are not coming to the market to just watch the charts or just to entertain us. What we are coming to do is what is to buy or to sell. So we have major types of analysis, which include technical analysis and fundamental analysis, with many traders using a blend of both approaches. You get people use combination of both. I have a trading friend, a trading body that actually trades both fundamentals and technical. So he's so big on both of them, and uses both of them accurately. So we have both those two. So let me break them down to you. So we have fundamental analysis. So technical analysis involve poring over charts to identify patterns, which I've been saying since, to identify patterns or trends, while fundamental analysis involve poring over economic data of that country, the employment rate, the tax rates, the numbers of employers, the numbers of unemployed, the cost per price index, everything. So point those data and report headlines and even random tweets from a certain world leader before he was banned or anything. Like I remember there was one time, was it Elon Musk, or I don't even know. I think it's Elon Musk holding some amount of BTC, and when he released it, there was, and Elon Musk is the richest in the world now, and the impact it had on that BTC that night was very, very crazy. If anyone knew, okay, this guy will be selling off his shit, possibly they know its value is going to reduce, or everybody will start placing orders. And if you're actually against that movement, that's all for you. So fundamental analysis is a way of looking at the forex market by analyzing economical, social, or political forces that may affect currency price. So we have the tank analysis. Tank analysis is the study of historical price action in order to identify patterns and determine probability. During the game of probability, I'll tell you in the number game, like I said in the beginning. So probability of future movements in the market through the use of technical studies, indicators, and other analysis tools. We use different patterns. I gave you every of those blueprints from the beginning. Use it to identify where is market heading to, and you do well to what position yourself to it. So tank analysis boiled down to two things: identifying trends, identifying support resistance through use of price action, identifying the movement, the direction, the entry, and it's all boils down to all. And congratulating you that I'll be teaching you every of those things, every of those tank analysis. I'll be teaching you everything in this course from scratch down to you being a pro trader, and you can stand out anywhere. So why is tank analysis important? Tank analysis of the market can help you determine not only when and where to enter the market, but much more importantly, when and where to go out. There are sometimes you need to go out of the market. The price is not pushing. It's not pushing to where you want it to go to. So what do you have to do? You exit the trade. You close the trade to either protect your profits or to protect your capital. So, benefit of trading the forex market, we have you can actually trade a wide range of currencies. You can pick any currency of your choice that matches your lifestyle, that matches your country time zone, and you can pick any of them and get to trade them easily. So we have the forex market hours again. You can see you can trade, you can key into any of the four major forex market hours: the Sydney, the Tokyo, the London, the New York section. It's flexible and it's open straight and market trades from Monday down to what to Friday. And you can actually trade any of those days. You can pick any of days with easy entries and like to trade the forex market. So we have no fixed lot size. You can't say okay, you must trade with also lot size, no fixed lot size. For my broker takes from 0.01 lot size to trade the forex market. So no fixed lot size. It's not you're not mandated to trade either one lot size, two lot size. It's flexible. So you can trade smaller lot size, depends on your account balance and what you can afford to actually lose on the particular trade. So that's what it's being used for. So deep liquidity, yeah. Actually, I trade just gold presently as a USSD. It has a deep liquidity. There is so much volume on that. It's not actually a currency pair, is a I think it's metal. Yeah, I think metal. I think under metal, but it's mostly due to how a lot of traders adopted it. Sometimes people call it more of like a currency pair, but it is not. So we have indices, we have index pairs also, and the like. So because of forex market is so enormous, it is also extremely liquid. There's extremely liquidity. This is an advantage because it means under normal market condition, with a click of a mouse, you can instantaneously buy or sell at will, and you are never stuck in a trade. You can even set your online trading platform to automatically close your positions. All this is what I've said. So we have a lot of opportunities, deep liquidity. We have a lot of money flowing in and out on the market in the chart. So it's just about how much you can actually catch. Ease of entry. There are hundreds of forex technical indicators. There are a lot of things to actually enter the trade easily, and it's all it's also come down to ease of entry. So yeah, going down to my vision, I'm so grateful to have you in this channel. Like I said, if you've not liked, if you've not subscribed, kindly do so right now and drop a comment. Tell me your problem, tell me your issues, tell me what you're not getting. I'm going to explain it back. So, first step, investing yourself in a skill set that can change the course of your life. I, Akinole Victor, I promise to help you to learn as fast as possible, and I know you will love it. Trust me, you will love it. My vision is to see every of my students hitting their goals, not just in the first trading, but also scaling up their accounts and living their dream lives. Yeah, forex trading can offer you that dream life when you stay with it. So and you put in the work. So all is possible if you are ready to make the decision to remain consistent and go after your goals day by day. You must be ready to go after your goals day by day. So we have recommended broker, like I said, is SNES. That's a very tight spread. If you want to register, this is the link. I'll drop it in the bio. If you need a partner code, this is it in the chat. You can just type it on it. Make sure you apply the partner codes when registering. If you need any assistance with registration, you can also call my attention to it. Just drop a comment and that's it. So thank you so much. That's the end for the beginners class. In the next part again, like I said, I'll be releasing how you can use calculate lot sizing very well. Then we'll move down to trading view, down. So if you've not liked, if you've not subscribed to that right now, I'll meet next